Good evening, guys. Give me a thumbs up if you can hear us coming through the channel. We're live here on the East Coast now, coming through. Happy Thanksgiving to everyone. If you guys are good, I've got John on the line here. Brenny's hitting me up with an interesting plan, actually. I really appreciate you guys coming in here. I worked until about 2 o'clock this morning, actually. I was up super late. Working on the 10,000 subscriber video. So not having that thing fly around the entire live feed. Hey, don't call the animal rights activists, all right? It was a little fruit fly, all right? Give me a break. So I've got Ernest Mycami in the group. You guys need to stay tuned. The 10,000 subscriber video actually deliberated pretty good on it. And watched a couple other examples of what some of the other folks did for their 10,000 subscriber video. And man, I'm just not an entertainer. I have a hard time stepping out and being something that I'm not. And I'm not saying that some of these guys are being something that they're not, but they got all kinds of charisma to throw down on. And I don't have a lotus to throw down. I don't have palm trees or any of that. I'll reference that in my live feed. But what I actually do, I've got about 40 minutes or so of content for the 10,000 subscriber special. What I actually did for most of the video was go through and thank a lot of the people who have helped build the channel. A lot of you guys, you know, you're part of the community here. So I'm going to focus absolutely on the group. I did make a few stock moves today, that of which I'll disclose to you during this live feed tonight. I've got Lydia Santiago, who needs to watch the road. Absolutely. You need to pay attention to the road. I don't want to be responsible for an accident. I hope you're home. All right. If not, be careful, because I came on early tonight and I know you commute home, and LA traffic is no joke. So I thank you. No, actually, no, it's not actually. Online, if you this was $299 actually. And it is a $700 watch. But it was actually a shelf model that I got online. I don't pay full price for anything. And I've made some big budget videos in the past, and it's actually one of my favorite topics. I'm pretty good at teaching budgeting. The stock market is just kind of what it is. It's more of a discussion, and lots of different options out there, but I've got a lot of people in the group here tonight, man. Very cool. I know we kicked it off a little bit early. I know I had it scheduled early. For that, I do apologize. I did have to check my settings for my audio. I apologize for that, because I think we pissed off a lot of people over the last couple of weeks throwing down. I had a lot of people waiting, and then couldn't get my sound right. And then all the loyalists came back into the group. So I've got some killer questions here, man. I've got Cashmatic. I'm going to hit this question right now. Ryan, do you use cash or credit card? That's an awesome question. It's actually topic worthy for a video. And you guys will be interested to know that I use a credit card for everything. And interestingly enough, there's different schools of thought on this. My school of thought is very, very simple. I'm sitting on another $600 of rewards on my credit card for purchasing things that I would have just purchased every day: food, fuel, groceries, sunken cost, etc. Things like that I use my credit card for, and I get points for that. And twice in my history with Bank of America, I've received a cold call, and they've asked me about activity that they've actually shut the card down. Now, the first transaction was fraudulent, and they tried another one, and they had me refunded in a day, all right? Conversely, if you get into the habit of using your debit card for your inflows and your outflows, those transactions are not covered. You're gonna have to go through the claims process with the bank. So those are the two reasons why I use credit card. And straight up, guys, the bottom line for me is it just makes sense. It just makes perfect sense. So killer question to lead off. I love the power of credit. I'm very careful to give that information out to you guys, because it's something that you got to be a little bit careful of. I think everybody out there should have a credit card, not 12 credit cards. You only really need one. look for the one. I think NerdWallet provides a breakdown of all the credit cards and the associated service out there. They're a good resource, but honestly, you don't have to look very far to find a good credit card. Capital One has a good program. I know Chase has a good program. Bank of America has a great program. For the first time, I saw the credit card that I actually have through Bank of America has been offered now and rolled out through Bank of America, and it is the Premium Rewards, and they haven't offered it. I've held the card now for about 3 or 4 years, and I've never seen the card advertised until now. So just for you guys to know, they've got those programs are out there. Just I'm not for annual fees. You don't need a $10 million credit card. You don't need that. Okay. Some guys do. It was pretty cool. Graham Stephan had a viral video hit that was pretty cool, actually. The 10 million credit card. I thought it was a joke, actually, but it was an invitation only for a $10 million limit credit card. So kind of interesting. But anyway, happy Thanksgiving to everyone in the group. Hope everyone had a great time with family. We took it kind of low key, actually, this year. And I just want to welcome everybody to the group. I've got, the channel creators who are in the group. I've got Lydia Santiago. I've already got her credit and shout out on the 10,000 subscriber video completed. So I am going on with some implied permission from you to take a snapshot from your channel. So hopefully you will grant me that permission. It's all positive. Unfortunately, you are at 956 subscribers, and you haven't quite got to that 1,000, but you'll be there in a couple of weeks. So I've got all my community channels that I endorse. I'll be talking, I'll be thanking, actually, as part of my give back to the 10,000 subscriber video. That video is going to be not about me. I'm ecstatic that we're at this milestone. It's really cool. It's what I always envisioned, people relating with the message. And I know a lot of people come to the channel and they're like, okay, it's not for me. I don't get it. But for anybody that's got a little bit of spark of entrepreneurship inside of themselves and maybe just want to ask a deeper question about how their money is working for you, those are the people that I relate with. I've got Shilo Liu. I don't want to mispronounce your name, but how often do you do live streams? I do these weekly. This is the 29th live stream that I've put forth every Friday. And I'm in my element when I'm doing this. It's a little different than the YouTube role in that I can converse with the audience. And YouTube is so one-sided. I really try to put content out there to strike up curiosity in people, whether it be from simple, basic financial information to more offering of stock picks, etc., things like that, moves that I'm making in the stock market. Has anybody picked up Apple right here? Might not be the worst idea. That stock is amazing. It trades like a penny stock when it does this, and people forget that just a month and a half ago it was a $1 trillion company. Find that interesting. But I'm going to kind of scroll to the top here. I got Doug Whitaker. I'm seeing just a ton of cool folks here. I've got Hart Miller. I don't recognize Hart, but welcome to you. Some of these cats that are making their way in here for the first time. Please hit me up with your questions. I'm not about wasting my time or yours, so just hit me up with your questions, and you'll understand really, really fast that the niche on this channel is talking about how you can put yourself in charge of your finances, especially your stock portfolio. And for a lot of people, that's a straight up eye opener. A lot of people don't understand that you can do that or are crazy enough to do so. And the more you study this topic, the more you'll understand that it is absolutely the most sane approach to the stock market as anybody out there. So I do have Ernest Mike Hammy in the group as well, who will also be, I've already completed part of the video, actually. I've got Travis Haywood, who I recognize Travis from the Facebook group, man. So real cool to have you guys in here. I've got some killer questions coming through tonight on this live feed. And I wish everybody a happy Thanksgiving, man. And we'll kind of get into this for well, it's going to be a cocktail hour for me straight up. And I don't mind having a drink with you guys. That's what I'm going to do with my time this evening. As we talk about my favorite topic, you'll probably get more candid answers out of me over a glass of bourbon. That's what we're going to roll with. So anyway, I'm going to kind of work on this. Facebook, it has been put into the group here. Obviously, just a killer. I think I'm down 2,500 in the position. A little bit different for me, guys. You kind of have to understand, as I've traded Facebook for years now, this 2,500 that I'm down in this position is on house money. All right. Now, for you guys that are just getting started in the stock market, and you're wanting to get invested, and you're wanting to see that get yourself in the black really quick, I don't blame you, but you're going to have to be patient. You're going to have to take your ups with your ups, and you're going to have to take your lumps when they're doled out. Okay, you can't expect it to happen overnight. Okay, so I'm not worried a bit. I just took a position in Facebook, and it's just getting abused right now. It really is. I own 90 shares of the stock. I think I'm probably $11,000 or $12,000 in the stock right now. And they've all taken a downturn at the same time. My portfolio is strong. So I'm getting some appreciation in some other categories, which are really saving me. I did put some money to the side this week as well. I did take my profit in McDonald's. Not for the reason that I thought that it was topping. It was more a positioning move to where I was already up 8%. So I decided to put some money on the side there. But you guys have to understand, the more you track those and you rack those good deals in and of themselves, right, while the passive stuff works, I've got good long-term cornerstones in the portfolio. And then I've got stocks that I put in the position when I feel like it's a good buying opportunity. And if it runs up within a matter of a month or a couple weeks, I don't hesitate to take those profits off the table, because I do so in the self-directed Roth IRA account. I had a comment come through the channel just this week talking about, well, you're advocating for no fees. What the hell's the deal with this $7 fee? And I kind of want to put that in perspective for you guys. I'm not giving you guys portfolio building advice thinking that you're going to start from zero and remain at zero for the next 40 years of your life or 20 years of your life, or whatever your investment time horizon is. I'm looking for you guys to build these accounts, and this money is going to grow in a way that you've never seen it grow before. Now, unfortunately, in the stock market, the last 2 months has doled out nothing but pain and suffering. I call it humbling. This is just the way it goes. And this is kind of why when I came on the channel 2 years ago and started talking about, hey, time out, and throwing the BS flag, you guys remember all that stuff. Nobody really wanted to listen and be like, come on, you know what I mean? This is easy money, right? We just throw thousands of dollars at the stock market and we make money. It's not that easy. It's not. You've got to get while the getting's good, and you've got to play defense when it is that you anticipate those eventual downturns in the stock market. And I called them throughout the Chronicle of video. I was doing it myself. I was transparent with you guys on making sure that you're taking a careful approach and not just putting all of your eggs into the stock market. You can diversify your assets in the stock market and still be over levered to the stock market. So you got to be kind of careful. So my position in Facebook is relative to my total overall portfolio. And if I own 4% of my assets or 3.5% of assets in Facebook, I can afford to take Facebook into a downturn. I'm monitoring the stock, and I may average down. I may not. I'm exercising my right to hold the stock right here, and that's exactly the prudent move. It's exactly the prudent move because it's oversold. A lot of negative news is beating the stock up, and I just think, man alive, there's so many companies out there that get the pass, and Facebook is really getting abused right now. And that's just the way the stock market is, man. That's, you trip up and screw up like Facebook did, you're gonna pay the price. I just wish I wasn't as heavily levered to the stock right now. Who knew? Who knew? I didn't. Anybody who tells you that they know, they're full of it. All right, that just doesn't exist. You make the best educated move into a stock at the time you're making the decision, and that's really what the best you can do. All right. Right below that, the Travolta has got the tech is rough at the moment. That's rough for me because I actually took some positions at the wrong time, and I took them at the same time. Kind of broke one of my rules. I've never owned Netflix. I haven't. But if I had owned Netflix and NVIDIA, I wanted to own CRM Salesforce more than those other two. But my rule of thumb for me that I broke wasn't to own Amazon, Google, and Facebook all at the same time. And here I am holding the bag on all three of them. And we're not talking about small positions here, guys. We're talking about, you know, relative to my portfolio, these are fairly big positions. So, you know, it is what it is. They're still fine companies. Amazon's making killer money hand over fist. This was a record Black Friday today, and I couldn't believe it. I knew the stock market was going to do this today, and there's no real reason as to why it should be doing that. It was a record day today for shopping. The consumer is strong. Everybody did quite well. Target, Kohl's were probably the big winners. I like TJ Maxx on a post-split basis. If you owned TJ Maxx, you got the split and double shares there. I believe it was a 2-to-1 split, if I'm not mistaken. So correct me if I'm wrong there. But Walmart did just fine. Best Buy did quite good. I'm not a big retailer investor, but it was fun to kind of watch and see, and hopefully get some idea of strength of the consumer, which kind of tells me and gives me an idea of a pulse going forward into Christmas. But who knows? Who knows what's going to happen? I'm definitely off my highs. I'm off my highs now, $10,000. I was in kind of a range between 190 and 202. And I'm right back at 190 again. So I'm kind of at the lower end of the range that I've been in for the latter 6 months of the year. So we'll see what happens. I'm not doing a whole lot. But my stock move today, I did enter a position, a fairly sizable position in AIG. Ticker symbol is AIG, and that's an insurance company. The other one that I'm looking at is Prudential, PRU. All right, so I'm going to throw out some of the stocks that I'm actually looking at, and they're not run-of-the-mill stocks. These are stocks that are that have come to my attention. You know, Baidu being one of them. Chinese stocks are getting beat up, but nobody's talking about Baidu right here, which is the equivalent of Google in China, and it's trading right now at a very good valuation. I'm going to go in depth on some videos, but just to forecast for you guys. If you do end up coming into the live stream, you'll end up benefiting from getting those stock picks ahead of time. And, it's the least I can do for you guys offering up your time to come in here and converse and wrap finances for an hour or hour and a half. So thank you. I got John in the group here, man. Very cool. Great to see you, John. Hope everything went great for you, man. Just throw your questions at me if you got. I know I've got some new joiners, and I want to focus in on these guys too. Make sure I get these questions answered. We're not going to have K97 tonight. That's too bad. Some of the other channel creators I don't see in the group here other than Lydia. So me and Lydia can run this group with no problem. I have no problem with that. Yeah, I've been enjoying a YouTube channel here recently. I would like to roll out and just kind of let you guys know it takes a lot to get me to consume your content. It really does. I just don't have a lot of time to sit there and watch YouTube videos. But I've been watching Meet Kevin. So if you guys have watched that channel, man, that guy cracks me up. I don't know how he runs with that kind of energy. If I could just run off of 1/6 of the energy that guy runs off of. But specifically, I've been watching a few of his coverages of, I think it was Barnes and Cardone and Dave Ramsey as well. Very interesting stuff. Sharp, witty kid. That's what I expect from the younger generation coming up, who's seemingly taking advantage of a lot of great opportunities out there, and really entertaining content, and I'm enjoying the heck out of it. It's really smart, very witty comment, and I don't think he scripts his stuff either. I think he goes kind of off the cuff as well, which is equally as impressive. So Got the Travolta, going to watch the record too, really late here, so you're bombing out. Brenny hit me up with a question, an interesting question about building up wealth over time, max funding the Roth IRA, contributing to an employee-sponsored, doing the maximum match 5,500. Those are pretty aggressive funding schedules. But I think he's got kind of an idea about investing some money outside of those retirement accounts into the S&P 500, and then taking some other monies, 50% as well, outside of the retirement, and putting those into some good dividend payers. And the idea is to build up that net worth, and then whatever you have at the age of retirement, to siphon 50% of that off and flow it into the VYM, which for you guys that don't know is the Vanguard's dividend ETF that they offer. Very low cost. It's got all the blue chips in there. Very, very interesting. It's only, I think it's just over 100 offerings in that VYM, if I'm not mistaken. You guys can double check me. I'm not going to do it now during a live feed. But it's a good ETF. And he wanted to know my thoughts about that plan, with the idea of making both dividend income and also having the cash on the side to buffer and support the retirement. I think it's a good idea, but I just, the market never ever travels in a linear fashion. It just never does that, you know. How would you feel if you were trying to make this maneuver now after the market's corrected back 10%, for example? And it does this often, you know. So my perspective is to try to set up multiple tiers within your portfolio, whether it be a fixed income tier, whether it be your cash tier, maybe even a precious metals tier. You know, you've got your dividend portfolio within your self-directed Roth IRA account, and then you've got your growth stuff, as well as your international exposure. And I think those 6 pillars right there, outside of a few different offerings within the stock portion of it, the stock portion is the most confusing piece, because you can get into growth and income, you can get into value, you can get into mids and smalls, and then you can get into international offerings and maybe even some emerging markets, as just depending on what type of exposure you want in that stock segment. But I think approaching retirement is going to be super important to have multiple pillars set up, because you're not going to have all of them firing on all cylinders all at the same time. It's just not going to happen that way. And I think if you expect them to fire on all cylinders and then you reach retirement age and it's just going to be at that position, that magical position where you're able to siphon off the top, and you're going to be able to buy those blue chips. You know, remember, if you've sold these stocks over here at a relative high, you're probably going to buy into the VYM at a relative high as well, right? So are we looking to make this transition seamless? Are we looking to delay a little bit and hoping to time the VYM, which is, it's a lot more difficult than what it shows on paper. And I think in theory, it's a very interesting idea. I just think if you want to start to gain a position in the VYM, you do it right now, you know, and make it a smaller position relative to your total overall holdings and grow it over time. I think that's a prudent move. If you want to own Johnson & Johnson, Procter & Gamble, JPM, Apple, Disney, aside from Facebook, all of those names are actually quite good, and they've been performing really well. But if you like those companies and you think they're going to be around in 20 years, which all of those are, in my opinion, all right, start to become an investor in those positions now. But I thought it was interesting. I always like those folks that are thinking strategically on where they envision themselves to be. I'm going to be coming out with a video on running a marathon backwards. And the idea is that you're standing at the finish line and you're able to reflect back over the race on what it took to get you there, what type of training, what type of preparation, you know, what type of pitfalls and perils and, you know, things like that that you had to go through to finish the race. And I think investing does parallel to that mindset, in that you really have to think about what you're going to reflect on when you're at retirement age, looking back. How would you have wanted yourself to invest? And that's a really cool way of thinking about it, because so many people want to invest and then they want to monitor it day after day after day after day. Well, if you reflect back on your life when you're in retirement on that perspective, is that really the approach that you want to make? It doesn't really matter that Facebook is down right here. It doesn't really matter that Johnson & Johnson is up. Procter & Gamble is up. JP Morgan is, Apple is just, it doesn't matter. You know what I mean? And it all just ties into that long-term perspective that, look, if you're going to win or lose in the stock market, lose being a long-term investor. All right. Don't lose because you are subject to finagling with your account too often. All right. Know that you're going to be reflecting on your approach 20 years down the line. And when you do reflect on it, say, hell, I did it right. And that's very, very important, guys. So I'm going to scroll through here and make sure I'm going to hit these. I've got John Marconi in here. Hope we all had a good live feed. I hope so. These are kind of my opportunity to come and work off the cuff a little bit. I enjoy engaging with the group, and if I can render any help to anybody who's in the group. I've got Becky on the line here, and hello to you. I hope all is well out on the West Coast. I hope you guys are doing great, man. I've got John here who gives me a thumbs up. Thank you for that. I appreciate the sound check earlier. So Brenny comes up with a follow-up here. So it would be a better idea to keep the individual stocks, Johnson & Johnson, Procter & Gamble, JP, Apple, Disney, especially those that offer dividends, and just take out the VOO and IRA and retirement. It could be, but it's going to be relative to what the market allows you to do, okay? You're not going to want to just think in definitives that way. You're going to want to be more flexible, and entering into investments like blue chip stocks are going to put you into position later on in life to make those decisions. And that's really the end all be all. You don't have to say, I'm going to do this, and here's how it's going to be in concrete. Here's how this plan is going to play out. Investing is really not like that. You can be very, very regimented at the beginning. You can be very, very regimented at the end. But everything in the middle, honestly, you've got to let the plan be set in motion at some point. But it's a really good follow-up. It really is. I've got Doug Whitaker in the line. Says, good evening. I've got Ernest Mikami. I hope you don't mind. I name dropped you on my 10,000 subscriber video. I had to. I admitted that I probably needed to be paying you a salary of $75,000 a year, but I thanked you for doing what you do inside the Facebook group free of charge. And I assume you do it because you enjoy helping people. And that's really in line with what my ethics call for in business, and seeking out a little bit different side of compensation and helping folks. It really does pay off in the end. It really does. So I've got Miles Jenkins in the group. I've got Teresa. Hello to you. I hit Becky up anyway again. I'm here. So charisma can be tiring. Just be you. Yeah, no kidding. And that's kind of the lens that I watch that through a little bit. I just shake my head sometimes, and I'm like, doesn't it seem like some people just get it really, really easily? You know, I'm sure that they would say that they worked really, really hard, you know, but I mean, does everybody really know what hard work is? You know, I think it's relative. I think with the internet and your ability to leverage the internet, your ability to put quick content online, quick witty content online, really gives you a competitive advantage to win subscribers and really capture people's imagination. I really think that's a lot of it, because when they see somebody rolling around vlogging of themselves in their Lotus, I just think a lot of people look at that message and they say, I want to do that. I want to be that. I just think it comes down to knowing your capability. I don't know. That could very well be who those folks are. I can't believe how quickly the channels have grown. All I can really do is focus on my channel, and I'm ecstatic for the growth on my channel. I think there's a lot of folks out there, and I have a lot of people that tell me this. in that if you can't sit across from a channel creator and relate to them, then you're gonna lose a lot of people from relating to your message or wanting to come and view your content. And that's what really I can relate to that, because I have the same criteria of people. Okay, if I feel like you're coming from a place that's not genuine or not real, and that's kind of what I feel sometimes. Is the beginning of it was it rolled up into a car show, you know, and there was Ferraris and Lambos and Porsches, and very nice. Does that have anything to do with my reality? No. Should I use that to somehow think my reality is less than yours? No. You know, there's a lot of people out there, a lot of really, really good people who are just working hard. And I've said this before, man, they may not open their own business. They may not go out and have the finances to get involved with 5 speculative real estate deals or investment properties. You know, a lot of people aren't going to have the capital. And in my mind, it takes a lot of capital to play in that pool. It really does. But yeah, no, I do agree with that. I really do. There's a few of them that I watch for entertainment value. And then afterwards, I'm like, what did I get out of that? I don't know. But I don't think that it's important that you listen to somebody and everything that's said, you can take for action, you know. But I think it is important to offer those tidbits out there to say, hey, look, I mean, because I've already disclosed my trades today, my AIG trade that I pushed out there. Why? You know, I needed an insurer in my portfolio. I didn't have one. AIG fit the bill. Prudential is number 2 on the list. It could have been number 1. I didn't really have an opportunity to differentiate between the two. But if I'm offering those little tidbits to you guys and not just blah, 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 talking all the time, which I can do that as well, you know, then you kind of stay engaged and say, hey, man, you know, Ryan actually does this stuff that he talks about. And I think that goes a long way with people. I really do. And you guys also know that I don't do this for a living. And that's another big difference between me and a lot of big channels out there. And I talk about this on the 10,000 subscriber video, in that I'm self-admittedly an introvert. I'm not a big social fella. I could really care less, to be honest with you, to have, you know, 6,000 friends on Facebook. I just don't care. And I'm not cynical about it. That's just my personality. Once you get to know me, I'm a lovable fella, you know. But this is just not me. And that's the ironic thing about me having this channel, is that the message was so strong that I really had to do something to use YouTube in the manner that suited me, and more importantly, it suited the people that I was trying to reach. Because I would go through my day and I would interact with people. And there was typically 1 or 2 or maybe even 3 people every single day that would come to me and say, Ryan, I need some help with finances. Can you help me? Yeah, sure, I can help you. And it's like you change one person's life and you start to understand that a lot of other people need that same amount of help or coaching or mentoring or just encouragement. Some of the folks like Brenny in the group, I mean, your question was legitimate, but you got a lot of stuff figured out already, you know? So what you take away from me may be along the lines of encouragement, as opposed to somebody who asks me about credit cards. You know, there was a time in my life where I had to answer that question for myself, and that's a legitimate question. What did you expect to hear from me? Did you expect a politically correct answer, or did you expect me to come through with an honest answer? Because the honest answer was, that's how I do it. And I do it for those 2 reasons. So, yeah, very true. I appreciate that comment. I really do. But I don't know, man. I'm just humbled at the fact that we are right around the corner from 10,000 subscribers. And I don't know where the channel is going to go from here. I'm not going to go climb a mountain. Okay. I won't do that. I think the 10,000 subscriber mark is just indicative of the people that we've been able to generate conversation with. You know, I know there's been a few people out there. There's a few people in this group tonight, and I won't name names. I won't do that. who have hit me up directly, and they know how I try to be as transparent as I can. It's becoming more and more difficult to respond to every comment on every single video, but I think I get a pretty good percentage of them to try, because I don't want somebody to make their way in here and say, man, I'm excited about this, but I reached out to the creator and they didn't even have the decency to get back to me. Some of the time it's actually very, very innocent as to why I don't get back to somebody, or they hit me up and I'm excited about it, but there's just not enough information there to get back to. So I try to make myself as transparent as I can with still having a life, because, you know, YouTube and you guys, I'm going to just tell you right now, at 10,000 subscribers, nobody is getting rich here. Okay. Let me just break it down to you. I wish I could just kind of just tell you straight up what the earnings are for a 10,000 subscriber YouTube creator is, making a little bit of passive income. But I can tell you this much right now. If you put the statistics in front of somebody new and said, here you go, you've got to start with a channel and you've got to keep the content rolling. You can never run out of content. And this is how much you're going to be paid per hour per video for the first 2 years. There's nobody in hell that would do it. Nobody is that stupid or insane to do it. You know what I mean? And it's just for the folks like us that it's something different that motivates the message. It's something different that keeps me coming back. I talk about the voice all the time. You know, I came out with a rant this week because I was pissed off. I mean, I was pissed. I'm sorry. And you guys should be as well, because just like everybody else out there, especially in the financial landscape, now they do it with class and with suits and ties and with fancy furniture and fancy offices, right? But it's the same idea. It's the same idea of stripping you guys of your rights to participate in the stock market directly. And that is something that is just amazing. You may enter into a mortgage only to pay the bank a ton of interest over time. You're going to enter into an auto loan, right? To where that asset eventually is going to depreciate and you're not going to get any return on investment. Investing, if it's done correctly, your ROI, return on investment, can be maximized in no better fashion than the strategy that I deploy. There's no better way. There's no better way than to take every dollar, put it into a tax protected and wealth preserved accounts and liberate it going forward. There's no better way. Unless you want to just get lucky and win the lottery. You want to gamble and get lucky. Those have no place in investing. But investing, you honestly have a way to control your hand. It's an amazing thing. And you can win in so many different ways in the stock market. You know, everything that Brenny talked about in the question there, all of those assets in some form or fashion can be won with, all right? But the crazy part about investing, and this is amazing to me, when I help somebody, I get them squared away, get a beautiful portfolio built, and a week later or 2 weeks later, a month down the line, they start to panic. Oh my God. Oh my God. Stock picks are going down, Ryan. What do I do? Nothing. Same thing that you did a month ago when you came to me and you asked me to become an investor. And I do hesitate to do that because there hasn't been adequate time enough to define that risk tolerance for that individual. Can I bridge the gap for you and tell you that you're here and you need to be here? Absolutely. I have no doubt that I have the ability to do that. But unfortunately, I can't think for other people. I can't manufacture risk tolerance for people. It's one of those learned arts. Some people do inherently have it, and other people need to evolve into the risk tolerance, like me. I had to learn it over time. I had to get skinned a few times in the stock market to learn it. And by God, I will never make those mistakes again. I'm referring to penny stock investing, right? So very, very, very important to kind of understand that, you know, the lessons that we're putting through on this are usable, but anybody can take a Johnson & Johnson stock pick and screw it up and flush it down the toilet. Conversely, you can put the same investment Johnson & Johnson with 2 different people. This one will screw it up. This one will take it and make it a success. That's the fickle part about the stock market. I don't make the rules, guys. That's just the way it is. All right. I've got Joseph in the line here, man. Thank you to you for coming in. Lydia's got to throw down with some questions here. I'm a little disappointed in you not making your 1,000 subscribers. You'll get there though, man. Actually, your channel's growing quite quickly. I talk about how humbling it is when you start a YouTube channel and you get your first subscriber, right? Because your subscribes or your friend subscribes. And then like, I only have about this many friends, right? So after I got my first 5 subscribers, I was like, now what do we do? You'll go for a week and you won't have a subscriber. And you notice it even more when subscribers leave your channel. You'll have 50 and then you'll have 48 and you'll be like, well, what happened, man? Google's screwing me, man. So, but you will be there quickly and you'll be eligible for monetization at that point. So congratulations to you. It's right around the corner. Yeah, no, I would never pay $700 for a wristwatch. Never. I think I paid $243 for this, actually. And it is a $699 watch. Thank you, Joseph. Appreciate it. Hart Miller's in here, man. Love the channel. Took a small position in McDonald's and Pepsi this week. You'll be fine long-term with those positions. I just talked to you about liquidating McDonald's. It was one of those positions that I wanted to shore up some cash in. There was another investment that I wanted to take, but I'm sitting on now about 10%. I was really over-levered to the stock market and took a pretty good haircut over the last 2 months of volatility in the stock market. I think we're going to be fine going into seasonality. I love McDonald's. It's one of the very few restaurant chains that I really, really enjoy investing in. I really do. I think they're a great company. Integrating technology, ease of access at their restaurants. I think you'll be very, very good there. Pepsi, I feel just the same way about. I really do. I want you guys to kind of think about, and this may be for you too, Hart, is don't try to buy every stock on the landscape. Take your time in building up positions and make sure that you have a diversified position in a nice ETF. The community knows that I beat the drum on the Vanguard's Total Index Fund, which is VTI, or you could win over time with the S&P 500. That's typically the most common channel that most people start with, is to go ahead and buy all the 507 companies, because you might own a beautiful stock portfolio of 10 of those, and you're going to have the other 497 just outperform. And it's very, very tough to be a stock picker and attempt to have any diversification in your portfolio. And that's where the S&P 500 comes in. That fund allows you to kind of have a barometer that's always eligible to add to, never take away from. You always want to just fund that account. And then you can look to add those good blue chip companies like you just did with McDonald's and Pepsi in your portfolio. But I love those 2 picks, man. I think you'll do good over time with them. Just don't get crazy. The stock market's very volatile right now. And it's killing everybody who wants to put new money to work right now. You might watch the stock market on Wednesday and it goes up. Today, it killed everybody again. So just be patient and be careful. Don't invest everything that you have. Look to build some defensive position and cash on the side as well. I think that's very important. And make sure that you're going through and sharpening your strategic budget in your financial lives. Those are the things that you need to do defensively while the stock market is getting crazy, because I don't think it's going to let up going into 2019. So be careful with devoting new capital to the stock market. Make sure that you're able to scale into positions. Make sure that you're able to take advantage of some downturns in the stock market. There are some sectors right now, and it's amazing. I've scrolled halfway through the script here, guys, and you're not. Maybe you are. Okay, so you can throw tomatoes at me if you're not identifying the sectors right now that are a buy. Okay, Anybody buying oil? I'm feeling the tomatoes, you know, hitting me in the face. Why not? I see. So a month ago, when oil was approaching or going to surpass 100, it was okay to invest. But now that it's come back and adjusted back because of a bunch of rhetoric, in my opinion, it's going to take one OPEC decision to turn this thing around. Exxon and Chevron, Royal Dutch Shell, those are the three majors that I turn to most often than not. I'm down about 5% in Marathon Petroleum since I recommended it. That's another good offering. I've got a couple here that I'll throw out to the group, and why not? You guys are coming into the group here at 45 minutes. I'm going to offer these stock picks to you guys, and I'm going to be doing the detailed analysis on them, but I'll give them to you now. Prudential, I've already told you. But an oil stock that is hot right now is Enterprise Products. That's ticker symbol EPD. The other one is Enbridge. Okay, now Enterprise Partner, I did take a position in that today. All right, so that trades under the ticker symbol of EPD and then ENB. All right, and I believe those are both limited partnerships, if I'm not mistaken. All right, so be kind of careful investing in limited partnerships within a Roth IRA. I've been corrected on that. There's a cap below 10,000, which means that you can't really generate earnings of over $1,000 per year without being asked to participate in the tax schedule of the limited partnership. So I'm actually going to start to phase out my limited partnerships within my Roth. It's actually the very rare occasion that I would recommend if you guys had an individual account or an M1 individual account or even a Robinhood, you could enter into a position like an Enterprise Partner or an Enbridge, traded under the ticker symbol ENB. Both of those right now are ripe for the picking. It's not even funny. It's nasty. But those two right there are the only two oil offerings. Oh, as well as Kinder Morgan. Kinder Morgan I've watched here at multi-year lows, around $17 a share. I would look at Kinder Morgan as an interesting pick to put into your watch lists as well. Emerson Electric is a buy right here. If you're looking for kind of an industrial type play, Emerson Electric is there. DXC is one, traded under the ticker symbol DXC. LAZ, Charles Schwab is another one I'm looking at. I've already talked about Baidu, the other Chinese stock that probably the only other Chinese stock that I don't own that's not getting crushed right now. But Baidu is a buy right here. I might be looking to take a sizable position in Baidu. DR Horton. DR Horton is the entry-level home builder. DR Horton is a value right here as well. Got a couple other ticker symbols here. I've already told you guys about AIG. But I did buy some smaller positions in a French utility company, which is ORAN. So if you guys are viewing from Eastern Europe, ORAN is one of those companies. I took a position in a regional bank today, KeyBank. KeyBank pays a nice dividend, actually. And these are all stocks that are trading under $20 right now that are extremely good value. KMI I told you about, and then Marvell Technologies is the other one, MRVL. I took a small position in that stock as well today. All those are under $20. So some interesting positions. If you guys really want to get squirrely, you could go out and buy Rite Aid right here. Make yourself a 10-banger. I don't know. We'll see. Any thoughts on Rite Aid? Any of these stocks below $5? Chesapeake Energy. How about Chesapeake Energy? Anybody doing some research on Chesapeake? Come on, you guys got to provide me back some value as well. I've got Avon. When was the last time you guys looked at Avon? I know I don't have my advocate for Sears in the group here, but what about JCPenney? Anybody buying JCPenney right here at $1? No, I don't blame you. I'm not buying those. I'm just kidding. Okay. But the stock's under 20, the ORAN from the French utility, it's the French telecom company. I did buy that. That's under 20. KeyBank, Regional, KMI, and Marvell Tech as well. So just to give you guys some meat and potatoes, actually some turkey and some sweet potatoes through the live feed. for you for joining in, man. Those are real. I'm going to be making videos on those. And I actually took a position in a few of those smaller in the SEP IRA because you guys know I take my earnings from YouTube and I tax protect it right away. I filter all that into the SEP IRA, and I will do that all the way up until $55,000 a year. I don't need the money. I've yet to render one single penny from my YouTube earnings. And that's just what I do. Just a little insight and a back door onto what I do with my earnings, right, wrong, or indifferent. That's what I do. Now, the government can't come knocking down my door wanting their money. I'm not working today. I'm safely home. All good for you. Lydia is having leftovers today. That is fantastic. Probably well deserved. Happy Thanksgiving to you in all seriousness. I don't mean to joke with you, but I'm surprised that you didn't know like 45 more people that you couldn't just coax into subscribing to the channel. And so when I took my screenshot of your channel, I could have got it with like 1,006. That would have been cool, you know? So pretty cool. Joseph is talking about the MJ stocks. I've been off the grid. I'm not, I follow them, but I have no inkling to invest in them. There's just way too much value being created on the other side of the house. Stocks like Home Depot, Costco, names like Walmart right here, you can get on a quick dip. A lot of value I'm noticing, man. I would pick up TJ Maxx on a post-split base here. TJ Maxx can be a cornerstone in your portfolio, man. They're not small potatoes, guys. They're a great company. Kohl's, Ulta Beauty. God, the list just goes on, man. There's so many good companies out there that you could jump in. There was one today that really had a killer. It was, I'll think about it. But some of the really, really good industrial companies, UTX killed it today. That was one of the bright spots in the portfolio. You know, telecom is probably leveling out right here. I don't know what's wrong with AT&T, but I still think Comcast is a buy right here. Get crazy and look at Vodafone. Why not? You know, they own the market in Eastern Europe, especially Czech Republic. When I visit, Vodafone's the spot for telecom services. So a lot of interesting stuff out there. I apologize. I wish I could give you more, but I tend to stay a little bit restricted on that topic on this channel. And the more you stick around, you'll kind of understand why I do that. I'm very reserved on that. If I did talk about it, my channel would probably end up above 50,000 subscribers because that's the question that everybody wants answered. And I do have more of an opinion about it. It's just one that I'm not going to disclose through a public forum. I just can't do that. And I hope you understand. So we'll talk about stocks that are actually legal now. Alcohol, stars, Constellation brands, right? We can talk about MJ indirectly if you want to, right? Coca-Cola Classic, Pfizer, stars, Constellation brands. That's a big one. How about Diageo? Could do that, right? So some indirect with Philip Morris, Altria Group. You know, if you really want to do it, play it that way, play it indirectly. You guys that are playing that market directly, man, you've got more fortitude than me, man. Unless you're seeing something that I'm not seeing, or I have more discipline than you. And the verdict is still out. I think long-term you'll do quite well. Just make sure that you keep it within reason, all right? In all sincerity, keep it within reason. If that's going to be the speculative side of your portfolio, keep it within 5 to 10%. And if you're young, tear it up. Tear it up. I'm 41 years old, all right? I'm not going to put my entire retirement into MJ. I'm not going to do that, all right? Is it prudent for me to take 2 or 3% and put it in there? Maybe, but I've got, I'm getting my ass handed to me right now in technology. So, you know, you want me to just double down on MJ and have a beautiful portfolio of a depreciating technology sector, that of which I do believe in, or an industry that I actually believe in. I really do. I think from an investment perspective, and if you're reading between the lines here a little bit, and you're young enough to take on that level of risk, tear it up. Tear it up. Over the long term, I think you'll be fine. But in the short to medium term, you better buckle your seatbelt, okay? And don't come crying to me when you take a haircut of 50% on a stock that you buy into that you think is going to be, a four-bagger, okay? So just be careful. That's all. And that's prudent advice. That's real advice. All right. Going on about an hour, guys. Been a killer live stream, man. I appreciate the questions. Been awesome, man. Thank you so much. Already answered the cash or credit question. How often do you live stream? It's every Friday, 9 o'clock Eastern Standard Time. Hi, Cash. How are you? Cashmatic is in the house. I thought you were asking me how much cash I had. Man, that would have been an interesting question, one of which I hadn't had it through the channel yet. That would have been cool. How much cash do you have, Ryan, by chance? So cruising down the list here, man. I've got John. Credit with the caveat that you pay it full every month, get that cash back. Yeah, so I'll let you guys in on kind of a thread. I'm addressing John's question here about paying it off. And that's the discipline for a new investor. You got to start. And if that balance is $300 a month, credit card companies are freaking evil now. They'll give you a $7,000 credit card if you can spell your name correctly. All right. So you just got to watch out for that. Typically, a new introductory balance would be around $500. Okay. If you're going to end up putting fuel on there, okay, because you can really get crazy with putting everything on there at the incept of getting a credit card, okay? And you want to stay below 75% of the total overall available credit on the card, to John's point. Otherwise, it's going to count against you on your credit score, all right? And that's not what we're looking to do. We're looking to build credit. We're not looking to degrade our credit, okay? So if you put, on a $500 credit card, if you put $450 on there, your credit score is going to suffer, all right? What you need to do is you need to put that fuel on there for the first few years of owning the credit card, or the first year, or whatever discipline you want to employ. Do it through just doing fuel and paying it off every month. And by paying it off, that balance is going to go up, and that $500 credit card is going to turn into a $1,500 credit card, then a $2,500, then a $5,000 credit card. And it's just going to allow you to open up your playing field a little bit to say, okay, I started with gas. Now I can start with gas and groceries, right? I just don't want to see you go out and put a bunch of, consumables, sunken costs, luxury items on the credit card at the same time. That can be really, really overwhelming, because it's a very powerful tool. Make no mistake, a credit card is just a legit convenience tool. That's all it is. All right. And I give you it from a perspective of somebody who's got credit licked. All right. They cannot make money off of me. They can't. I do pay a touch of interest on a balance that I do carry. I don't pay it off every month. Being part of the military, I am subject to the Soldier Sailor Civil Relief Act. I do have that on my credit card. It's capped at 5.9%. Another credit card I have is also subject to the SSCR-A Act, and they capped that at 0%. All right. So some good deals there. Those are the only two cards that I own, and they're both under the Soldier Sailor Civil Relief Act, which is a good deal. Caps it at 5.9%. But for you guys that get good introductory rates, don't be teased into that, all right? Because make no mistake, they're issuing that card. They want you to fail, okay? You've got to surprise them, all right? So good stuff, John. Thank you very much. John Conlon's right below that. Hey, Ryan and everyone, hope you had a nice Thanksgiving. And thank you for your help, Ryan, in returning my messages. No doubt, I thought your plan was good. I thought it was good. I appreciate you reaching out to me behind closed doors, for a lack of better terms, man. Sometimes that's the best way to do it. I think you're killing it, John. I will say that publicly. I think you're doing just fine. I think sometimes when people get into the investing mindset, or they get introduced to the investing landscape, guys, I gave away with the pipe dream of becoming a millionaire a long time ago, especially with regard to investing my way to $1 million, okay? The more I let go of that pipe dream and start to focus really on my reality, which is my plan, my investments, my stewardship. The more I focus on that, the more I look at money as a byproduct of my plan, right? And not a direct result, okay? And I want that for you guys. I want you to look at money in that way, all right? You have to kind of look at money in different ways. Again, one of my favorite videos that I've come out with is Money, the Forms of Money. It's one of my favorites, and nobody watched it. So for you guys that haven't seen that, it's really cool. It's the one where I've got a $100 bill. And the point of that was so good, because a lot of people look at that and they get that $100 bill, and that's the only thing they look at. They don't look at it as shares of stock. They don't look at it as a sunken cost. They don't look at it as a piece of precious metal. They don't look at it as a hedge against inflation. They don't look at it as taking that $100 and maximizing its potential. They just look at it as $100 in and $100 out. $100 in, out, inflow, right? It's the inflow, outflow type of idea. And if you can change your mindset and allow money to define investing capital, allow your money to define savings capital, allow your money to define your sunken cost, allow your money to define all these different avenues in your life, and they'll take on those different forms, right? That's your total overall financial perspective, right? Introduce life insurance. And that's another thing that I didn't talk to you about, John, directly, is that was going to be my question for you, is to make sure that from a comprehensive perspective, you were looking into the prospects of maybe providing some life insurance. And that's just another form of money that you have to look at to say, in the event of my untimely death, is my heirs going to be taken care of? And that's one of those questions to say, geez, Louise, can investing get me there? Sometimes people look at investing dollars and say, I want this out of it. Is that money capable of producing those types of results that you have for those money? And that's why I talk all the time about financial goals, okay? Sometimes a term life insurance policy can supplement what it is you need for that money for the foreseeable short-term future, whether it be 10 years or 20 years down the line, to say, if in the event of my untimely death, right, something happened to me, you know, my heir is going to be paid that money out no matter what, right? No matter what the stock market is doing, no matter how ill-timed or little time I've got in the stock market, to allow my assets to kind of come to what I have for them as goals, right? Because we don't know what's going to go on tomorrow. We don't know. All we can do is have a comprehensive approach to making sure that we're maximizing our dollars the best way that I know how. And I don't hold back. I give you guys everything I've got as far as, you know, these different strategic categories. And sometimes if you guys get anything from this live feed, you've tuned in for 1 minute and 2 minutes. So now I can really start to talk turkey to the loyalists in the group here. Ask yourself what it is are your categories of strength. Is it land? Is it your tangible assets? Sure, all that stuff goes into your net worth, right? Your cash savings, right? College savings for your children, life insurance, fixed equities, stock, right? Start to ask yourself what categories you enjoy. Maybe you've got 1 or 2 categories, and maybe you want to add a 3rd category. Maybe you've got 10 categories, and you can strengthen a few of them, right? That's the whole idea of financial building, not necessarily portfolio, but looking at more comprehensive financial planning, long-term care, et cetera, things like that. Now, I don't want to bore the hell out of you. You guys know I'm not a financial planner, nor will I ever be. I despise the industry, so I would never, ever do that. You guys could consider me a turncoat if I ever did that, because I advocate for individuals doing what I feel they can just as easily do. And a lot of people don't think they can do it, and I'm here to tell you that you freaking can do it. All right? All right, cool. I stick with cash, so I got better control. I've got Travolta right below it. That's kind of the European way, man. It's interesting. I pulled out my credit card in a small town in Czech Republic last time I was there on vacation, and she looked at me like, what are you doing? You know, they had to dust off the credit card machine. You know, I felt like I was offending somebody. You know, I'm sorry. It's just, you know, it's the normal way in the US, and it's crazy. It's not right. You know, it's convenient. It consumes a lot of people. But I think the lesson that can come from just utilizing cash can really, really control. Control is the word that you speak of, and I agree with that. I think there's benefits to both, and I think if you could strategically deploy both. Right below it, the comment says that he has no debt, or she. I'm sorry, I assume that I should say the Travolter. Sorry, I've got to stay gender neutral on YouTube and everywhere else. No pun intended. But having no debt is key. Just, you know, don't live your life with fear of taking a little bit of a strategic risk. Okay, investing in stock is a mechanical thing. Okay, there's so many people out there that want to deploy the exact same emotion to stock investing that they invest in a football game, right? Lions score a touchdown, we're excited. Lions lose the game, we're mad, right? Stock goes down, we're pissed. Stock goes up, we're happy. Does that sound familiar? Watching a football game and using the subset of emotions that we have, because we're emotional creatures, right? So when we watch that football game, we want to engage. We want those endorphins to kick in, right? We want to be emotionally connected to the event. Stock investing is not like that. It's one of those things to where you have to train the unnatural portion of investing like a robot. And I hope I didn't defend somebody. I commented back this week in the group where they were asking me about this very topic. And I said, you want to know who the most successful investors are out there? And it's dead people. That's the truth. It's dead people. Major brokerages, they run these statistics on derelict accounts that are surrendered. Basically, they had no heirs. And I mean this in all sincerity, but it does have an underlying message to it, in that they run these statistics and there's no heirs for these accounts, and they end up being surrendered to the brokerage account. And the people who end up being the most successful investors are those that do not have access to their money throughout a year's course of time. And those groups of people always are at that very top of the data pools. Why? Because they had no other choice but to become passive on their investments. They didn't have access. They were deceased, right? And so the statistics show, and this is multiple brokerage accounts over multiple brokerage houses, this same statistic always is the cream of the crop at the top. And if you can take some sort of a lesson from that and say, gosh, if I just put my plan to work and let it roll, how successful could I be? Remember, standing at the end of the race here, looking back over your life and saying, you know, what could I have done differently? You know, you're not going to get a second chance to do that once you've already crossed the tape and you're done with the race. You're not going to get a chance to do that. The time is right now. The time is now. And I've got a lot of folks here who are waiting for the investing in your 50s, 60s, and 70s video that I'm coming out with. A lot of people are coming to the channel and they're like, man, I want to invest in my 50s. I want to do that. Absolutely. It's never, ever too late to get involved in the stock market correctly, right? But your time, whether or not you're 50 or whether or not you're 20, is now. It's just for the 20-year-old, you have more time. That's it. All right? All right. No debt. That's awesome. Watch your video earlier, didn't smile at all. Lydia, you got to smile more. She's probably laughing right now, actually. She's laughing because I'm such a funny guy. No, I'm not, actually. And I just can't. It's back to the charisma piece as well. But I do think I need to drive a Lotus. I do think I need to go pick up a Lotus, actually. That might add to my charisma a little bit more. And I think you guys would probably respect me more if I cruised around in a Lotus, actually, correct? Remember, image is everything. Another one of my most successful videos that nobody ever watched. Absolutely. I got Tim Tellers in the house, man. Very cool to see you. Hey, Ryan, I picked up 2 shares of BAC. Very good. Take a starter position in the stock. Bank of America is not my creme de la creme. It is in my top 5, absolutely. I think Goldman Sachs here is probably interesting on a pullback, but JP Morgan Chase is really my flagship financial. I did tell you that I just took a position in KeyBank, which is another very well-run regional bank out there. Fifth Third is the other one. That's another good bank. But KeyBank is a good one. I like Umpqua Holdings. I'm actually from that area in Oregon. And Umpqua Holdings is actually one that you guys might not have ever heard of before. I can't give you the ticker symbol off the top of my head. UPQA, maybe. That's off the top of my noggin after a couple bourbons. But that's what it is anyway. So I like Bank of America right here, and you're getting it at kind of a reduced price, but financials is tough. Financials have been abused for the last 10 years. And, you know, it seems like every quarter point or every quarter basis point of interest rate hikes we get are favorable for the banks, but the stock market goes down 5,000 points. So the stock market is like a cranky baby right now, which is just, I don't know, it's frustrating for me. I think we do need to be raising rates. That's just my opinion. I'm entitled to it. I'm an American. Well, it doesn't have anything to do with me being American. You know, you can speak your mind no matter what. But I think we should be raising rates. I think living in a manufactured environment for this long has done nothing but get people into the habit of watching their money do nothing but go up. And I think we need to start to nominalize rates, and we're not even there. Normalize rates. So, and I don't think we're there, but I like Bank of America. That's a good pick for any of you guys out there that's looking for financials. I did sell Wells Fargo this week. So Wells Fargo is gone. I do still own Citigroup, which is one of my main financial services holders. Of course, you guys know I have Blackstone Group as well, the limited partnership. I did sell BlackRock as well. I did not want to. There was no fundamental or technical reason to sell the stock other than shore up cash and take some profit. I was up 6% in the position. So I took the cash. I put that aside right now because I just feel like any win right now in a volatile market is worth taking. It really is, without trying to compromise some of my cornerstone positions in the portfolio. So guys, I will start to wrap it up tonight. Actually, this has been just a killer live feed. I want to be fair to the folks that tune into it and catch it later on in time. Our friends from Australia who can't tune into it Eastern Standard Time on the west and the east coast of the US. So I do want to kind of keep it under control. I'll aim for minute 20. And we'll say goodbye, and thank you so much for coming in. I'm going to try to address these last few comments in the group. If you have anything pressing, man, take advantage. You've got me in my element right now. So if there is anything that is pressing, man, be sure you throw it in the group here. But I've pretty much hit every question in the group here. Some awesome discussion. If you didn't understand my response to you, now's the time to seek clarity on those. If you just anything out of the blue, if you guys want to know, throw them into the group for our last 7 minutes or so here, the live feed. Very cool. I have 6 shares of BAC. This channel is awesome. It is awesome. It is awesome. You want to know why it's awesome? Because I'm a normal fella talking to normal people, no doubt about it. And I don't know, that there's been some real perils in my life where I come from. You know, commercial fishing has a way of driving out motivation in you and making you get used to working for free, basically. And it was tough for me because I was always an entrepreneur and I was always just self-deprecating, like, what am I doing? Why am I doing this? I got to get the hell out. Why, help me, Jesus. I need out, you know? No offense, Lydia, because I did enjoy being down in Southern California, but it's a tough way to live, man. It's a tough way to live, especially when you see everybody else seemingly, you know, getting what they want, you know, and that's maybe I'm coming from a jaded perspective and maybe somewhat of a jealous perspective. I don't know, you know, I always look at people and say, God, what did that person do to get that? You know, the older I get, the more I kind of let go of that crap. You know, that was a lot when I was in my 20s, and I always wanted to aspire to more. And I don't want to apologize for that. That's just the way I am. I always try to aspire for more in life. And it doesn't have anything to do for me on the financial side of it. The being wealthy and the riches and all that stuff, that's all relative. And I have a deeper perspective on what that actually means. But just to put something out there that you've generated from scratch that is incepted from nothing, and you build it into something, that to me means everything. Not only that, but if it weren't for us coming up with the idea of the independent investor channel, there would have been 10,000 people who may not have been introduced to this prospect. And I know there's people out there that are killing it. And I've said it many, many times. There are going to be people who hear this message earlier than I got it. They're going to deploy it better than I did. And they're going to succeed more than I ever will. That's amazing. Now, those are the types of people that I look at and say, you know what? This guy came to the channel and he understood, wow, I can do this for myself, man. There are passive products out there. There are products that I can buy, great blue chip companies that I can invest in. I can do this on my own. I don't need any help. And if I do it young enough and I ignore it, I can succeed. That's absolutely the niche of the channel, man, when we're putting it down and making people just understand. And again, for those people that come through and they say, look, Ryan, it's not for me. I get it. I tip my hat to you. I wish you all the best. I really do. But so many people give away the farm. It's just amazing. And in a landscape looking to take advantage of every single one of people who have just a little bit of naive, I was one of them. I was taken advantage of, and people are taken advantage of every single day in the financial landscape, some worse than others. And through the course of this channel, I've done nothing but validate my position on this topic, in that I've got people who hit me up and they're like, Ryan, look at these 6 mutual funds. I'm like, what are you doing with 6 mutual funds? Sure, I'll look at them, and I look at them, and they're all 1.5 expense. Some of them over 1.5. Some of them approaching 2% managerial fee. There is no reason in hell that you ever need to justify paying 2 basis points of expense on a mutual fund that you own. You will never, ever outpace the market, ever, by doing that over the long term. You won't. You won't. Historically, you will lose. So why do it, right? And then to take that and compound the problem by taking that mutual fund, high expense as it is, and putting it into an account that's subject to hidden fees, annual fees, fees that they, before they even invest your dollars, because, you're so special that you need to be charged to invest your own money, right? This is what they would have you believe, and it's crazy. But they're going to take 5 3/4 basis points from you on every dollar. That's why they put you in 6 mutual funds in the first place. So they can split it up and take the $100 of DCA contribution and charge you 5 3/4 basis points on each one of those contributions. You think I'm lying? Go check it out. Check it out for yourself. I wouldn't put through this information if it didn't actually happen, not only to me, but my family. And I can guarantee you there are thousands out there who are subject to these fees, and they are naive to the fact that they're being charged for it. All right. It's one of the many fundamental lessons that we push through on the channel here, man. And it just has to do with education. But I think if you have a little bit of insight and just a desire to know why and how, it's a fair enough question to sit across from somebody, anybody who is looking to earn your business, to ask them, how much do you charge? And if you're not happy with your answer, go somewhere else. Go somewhere else. But a lot of people don't even ask. All right. Let me roll through the rest of these and make sure that I got these questions. You have my permission. Thank you so much. If I need a legal disclosure, I'll send it to you. But I just went out on a limb and implied it's a positive endorsement. It's for you. So, and you haven't been part of the community for very long, but I certainly do appreciate. Lydia Santiago is the only channel creator from what I understand in the group this evening. This has actually been one of the best live feeds I've ever done, guys. I don't know if it's the bourbon, but you get maybe a different side of me, a little bit more relaxed. I love finances and I love stocks, but specifically, I really enjoy taking someone who doesn't understand it at all and giving them the fundamental pieces to understand what it is that they need to know. And that's a beautiful thing. That's an empowering thing. And empowering means that they're able to take the information and start to evolve and teach themselves. And that is an awesome, powerful thing. For me, money's easy. It's easy. And I can't believe how, for a lot of people, it's the most difficult thing that they deal with day in and day out. And unfortunately, for a lot of people as well, it becomes systemic in nature and it leads to other problems in your life. Guys, I've seen it. It's really, really tough. A lot of people think that they can be a better father by becoming a better investor or shoring up on their financial or supplementing other portions of their life. You know, it just doesn't work that way. It doesn't. And I'm totally glad to help, man. But thank you for the permission, Lydia. Just stand by. We have 500 more subscribers to go on the Independent Investor channel. So if you know somebody who hasn't subscribed to the channel, please bring them in and help me get to this 10,000 mark, because now I'm starting to have like some anxiety in that we're going to get up to like 9,862 subscribers and then start heading back toward to zero. That would be not cool, right? Eventually I'd like to get there. That would be kind of cool. It was a milestone and a goal that I set for myself many years when I started the channel. My first goal past 1,000 was 10,000 subscribers. 10,000 subscribers is a really, really, really big, monumental thing. And in all sincerity, it's the intangible of not really knowing how many people I've actually touched. It's not the 10,000 subscribers necessarily that I care so much about. It's through earning that 10,000 subscribers that I've been able to meet really cool people, quality people. I've been able to help a lot of people. And we've been able to share a niche that I don't think a lot of people have a lot of knowledge about. And that's really where we're going for. That's some real talk for you guys. I really want to thank you for your time in coming into the live feed on a holiday weekend. Kind of, it was really cool of you guys to spend some time with me. I'm going to shut it down now and kind of allow these guys to have an hour and 20 to review, and I'm going to throw this online for these guys who are looking to review it at a more opportune time, guys. So I'm going to scroll down and make sure I got all these. Doug Whitaker, I've got Brent in the group here. Actually, Google just put like 100 comments in my comment section here. So this is where the real conversation has been occurring. I guess I would have liked to have known about that. That would have been very cool if I would have known. So I don't know if you guys were having a sidebar conversation or if you have a button that you can push, but they just plopped into my group here. So now I'm getting to review a huge script on this live feed. So we're going to push it up a little bit more for you guys that are on here. And there's 63 of you in here right now. So I'm going to push it up a little bit. I'm going to sell out a little bit. We're in extra innings right now, but I'm going to make sure I got to all of these questions here. Okay, guys? Because this just popped in here. Again, I don't understand why YouTube does this, but it does. I'm going to try to pick where I left off here because, again, it just dropped about 100 comments into the group here. Did he answer the question about what school and degree he went to? Are you talking to me? See, now I don't know who you guys are talking about. If I may not have spelled your name correctly, good to see you here. See, I don't even know where you guys are. This is the sidebar conversation. So basically, you guys have been letting me rant on for the last hour and 20 minutes, and you guys have been in a sidebar having another live feed in here. This is really great, man. I love it. Well, you guys go ahead and have a sidebar conversation, and I'm going to enjoy my cocktail hour. Love it, man. Very thankful for you guys. Very thankful. I'm going to try to get through here and make sure that there's no questions for me. Typically, when Brent comes in here, I've got Andrew Trapman, who should be sleeping. Andrew, what are you doing? Hopefully, a little compromise next week with tariffs. Okay. So Andrew just commented on the big elephant in the room. So if the tariffs get taken care of next week, which I think is wishful thinking, I hope they don't. Actually, this might be our one opportunity to actually win this. And I think it's winnable, but we got to stay tough. And I'm willing to put my portfolio on the line because eventually it's going to really speak to the longevity of this country, not giving away. It's not so much the tariffs, it's the patents and technology that I'm worried about protecting. But we'll see. There is a chance that something could go through there. And if it does, the floodgates are going to be open and you're going to, again, wish that you were an investor. So I've got Brent in the line here. This is the first time I've seen you pop in here, man. Again, I think you've been having like a behind the scenes live feed on the Independent Investor channel. But now that you're on here, I can actually ask you in front of the group with all of these witnesses if I can use a screenshot from your channel, man. I gave a call out to you on my 10,000 subscriber video that I've put down on wax. Obviously, I'm going to be waiting until we reach that milestone. But obviously, I gave some kudos to you through the channel. Took a screenshot of your channel. I didn't think you'd mind. It was all positive. But honestly, now that you are on here, and I just noticed now that YouTube's dumped these 662 comments on me at the same time, I just want to thank you. Your work on this live feed and the Facebook group and the YouTube forum, man, it's awesome. And I just thank you very much for knowing you. I've known you since the beginning of your channel, man. So I just want to thank you for all your help. Absolutely. And just stay tuned for the 10,000 sub video. Hopefully we get there within the next 10 years. That would be nice. That would be kind of cool. But anyway, right below that, I've got Tupperware. Yes, Tupperware. Newell Brands is absolutely a great company to invest in, if that's what you're referring to. I don't know for sure. I've got Jeremy Sims. BA is a dream stock for me, but still too expensive. Yeah, I don't know. It's come down pretty well. I wouldn't get too crazy about waiting too much. This is rhetoric about 1 out of every 4 airplanes being sold to China as being problematic. So I wouldn't wait too much on this, man. This was at 360. It's down at 315. Correct me if I'm on my numbers, man, but I'm very tempted. Boeing, Lockheed Martin, a couple that are on my very, very high conviction list. I don't know if there's a higher one than Boeing right here. So just be kind of careful waiting too long on Boeing. It's going to trade at a premium valuation. So when you say that it's expensive, I'll have to defer to your expertise on what you're looking at there. But I think from a relative perspective, industrials typically trade in line with a pretty, pretty increased valuation across the board. You got to be kind of careful. You're not going to get PEs like financials and industrials. So just be kind of careful with waiting too long. If it's a company that you want to invest in, I think you've got your buy point right here. I think I would jump on it and be a little aggressive. Thanks, Jeremy, for that question. That was awesome. Man, what a week, Brent says. Yeah, it was. It was interesting. It was a lot of fun watching my retirement account go down. It was great. I loved it. It was fun. Love being an investor. The good times outweigh the bads. Okay? That's a little bit of salt of the earth perspective from the Independent Investor channel, man. So I've got Andrew Trapman, hopefully a little compromise next week with tariffs. That's a really, really good one. I agree with that. And you need to probably go to bed. I don't know what you're doing up right now, man, from down under. I don't understand why you're up watching me. I'm not that interesting. You can watch me when I put this online. You can watch it at your convenience. You know, I guess maybe it's better watching live. I don't know, to see what kind of crazy stuff I'm going to do, you know. I had somebody telling me I needed to gain more charisma and be not myself anymore. I'm just kidding. I do. Maybe I'm going to buy that Lotus. Seriously. Now you guys have got me thinking. Seriously. Mike Lowry says, okay. And as for pharmaceuticals, Pfizer and AbbVie, excluding J&J. So Pfizer, I'm holding long. Merck, I am holding long as well. J&J is great. AbbVie is great. I do like Thermo Fisher Scientific. I am holding Medtronic long. Their quarter was good, but they're being consumed by the rest of the stock market right now. Healthcare is one of those sectors that you just want to be in all the time. So if you're abiding by some of those rules of portfolio diversification, I typically earmark 15% in healthcare to try to have some exposure to, and you can gain your exposure through any of the names that you identify there, and a couple more that I really, really like, Thermo Fisher being one of them, Medtronic as well, Merck, that you did not name. But you can gain your exposure through those stocks, and healthcare's been on fire. So you'll go figure. That is my perspective on healthcare. And as I told you, I've got some pretty good exposure to healthcare. So, hey, Brent, good videos on your channel this week. David Mathis, that's awesome. Thank you, Brent. Let's see here. MJ is taking a haircut right now. That is true. I'm glad to not be invested in it, but I'm invested in the rest of the stock market, and that's taking a haircut too. So there's not a lot of places to hide right now. That's why I would say be cautiously invested. Keep your long positions long, and keep your cash building on the side. That's a really, really important aspect. Okay. Investment journey for my understanding of how XI rolls. I think they will press release something diplomatic, but nothing material will be reached. I think you're right. I think you're right. I think the Chinese don't really care. I think they're going to roll with this until just something breaks on our end. That's what I think. I will say this. I potentially think maybe that China may need us as much as we need them to be fair in it. And I think if you could say, well, across the board, the trade deals that have gone on for the last 10 years have been fair and equitable across the board, right? Then what are we talking about, right? So we'll see. We will see if we reach some sort of resolution. It'll be interesting to see, but I think we should continue to press to reach a little bit more fair trade agreement. And it's not so much the tariffs that I care so much about. I think a 25-25 tariff washes at the end of the day. So why not just do away with them altogether? That's just my easy perspective on it, but we'll see. We will see. If it does end up reaching some sort of tailwind and agreement, it's going to be off to the races for the stock market, because the underlying economy is strong for each of you guys who are so worried about the stock market going into a tailspin in 2019. The economy is actually quite good. So nothing to really hang your hat on. I mean, this stuff that we're talking about, yeah, geopolitical risk, whatever, some political risk here at home, that's it. Man, if I had that scenario year in and year out, I would absolutely go for it. Covered calls I can't buy in my account. I've got a $500,000 limit. I've asked. So I've got Felipe Cabral. I don't dabble too much in calls. Really, one of the aspects that I really stop with my risk tolerance at stock, calls and puts, options in general being kind of above that in the risk tolerance category. And it's one of those that I'm really not sharp on. And it's one of those I really wouldn't want to comment back to you. If I was going to get involved in calls, it would be calls that I would like to do, but my account allows me only to put options on my positions now. It's got a minimum balance, and that's just one thing about Merrill Edge, that I don't think they're quite as competitive on other ends, but it's a service that I don't really take advantage of. I do appreciate your question, and if you got any amplifying for me to learn me up, man, that would be awesome, because it's one of those areas that I feel like when I have more time, maybe in retirement, to get more involved with, but I don't understand enough about it to actually enter into the realm of options right now. I've got a whole host of other things to be involved with right now, but I do appreciate your question. That's awesome. Please don't forget to click on the like button to support the channel before exiting for the day. And that is another one of those individuals that I really need to ask permission before I can say thank you on my 10,000 subscriber video, man. Ernest is just a rock star, man. I really, if I ever have means one of these days, and these guys think I'm kidding too, we will be having a very large independent investor channel party going down in one of my favorite cities, which will be Las Vegas. And we will be sending out an invite. It'll be like along the theme of what I've built throughout the course of the channel. It'll be like a no charge type of a thing. It'll be a lot of fun, man. We'll throw down. We'll have a good time. It'll be fun. But I really want to meet some of these guys that have helped me really just come together as a group. I can't do it myself. That we're so much more powerful together if we're exchanging ideas. You know, like Felipe with the question about options. You know, it's just not something that I do. Self-directed investing is something that I do. Can I buy covered calls in my self-directed Roth IRA account? Probably. In a different brokerage account? Yes. Does Merrill Edge offer it? No, they don't. I don't meet the minimum, the league minimum to play, I guess, which is 500,000 to play in that arena. But interesting enough. But if you guys are in the group and you do, if you can hit the like button more than once, that would be cool. Like if you could just sit there and just ping on it like a bunch of times, that would be cool. Because I don't know if I can like my own content. Can I? No, I can't. I just tried. Yeah, so I can't do that. So if you haven't already hit the like button, go ahead and do that, because what Ernest says, you got to kind of do. He's kind of an ambassador, so he carries kind of a lot of power within the group. So I'm going to try to get down here. I've got Lydia here. Respond to some comments in the group. That's awesome. Lydia, if you ever need me to answer a question for you, just earmark it, because I'm scanning through here, and you know how tough that is, because you do the live streams as well, but you end up conversing with the community so well, man. I really appreciate it. It's awesome. I've got Sarah Logston, man, who's actually another long-term, really loyal subscriber of the group. And I do have you in the group of listing of people that I'm going to mention during my 10,000 subscriber as well. So I really thank you for the interaction as well over the years. It's just awesome. There's so many cool people, man, in this group that just from all over. It's just awesome, man, to hear so many different perspectives, that of which I would have never, ever had the chance to interact with. You know, I'm an introvert. You know, I don't mind being in a corner with my nose in the corner most of the time. You know what I'm saying? So it's kind of cool to meet most of you guys and converse and swap ideas with. It's really cool. So financial investment, I like this sale. I wasn't really adding a whole lot of equity earlier because I was positive. Now I'm negative for the year and adding more cash each week. Yeah, it's been like that. I mean, I would hope that you have a passive barometer that's at least tracking the index. You know, that's why I talk about that all the time. It's really important to have that diversified base. I think you do. But these are the times when no matter what you invest in, you're going to take a haircut on. Man, it's humbling. It's really tough to look at the S&P and say, God, the S&P's, you know, down 1% and I'm down 4 or 5%. You know, what do you do? I'm not outpacing. I'm undershooting the market, and that's not cool, you know. But what is cool is having the S&P 500 passive and actually knowing that that pillar of the portfolio right now is meeting the S&P. But the thing about it is, Brent, and I will comment on this a little bit, in that looking at the stock market as at a specific juncture of time doesn't really lend weight to the overall perspective. And that's what money managers, Jazz Wealth does this really, really well. He looks at it and says, if you invest passively, you're stupid. If you invest passively with cornerstone stocks, you're stupid, because it'll never outpace the market. And why are you trying to just pace the market? You should be looking to outpace the market by buying small cap stocks. Okay. That's it in a nutshell. All right. And I say you need to invest in all of them. Small cap stocks, S&P 500, good quality companies. Because here's the thing. You can look at a portfolio at a given time and say you're either down or you're up. What does that really mean in the long term? It doesn't mean anything. And it's really misleading to people to say you can't do that. You can't invest in a Johnson & Johnson because 1 year it didn't perform up to speed in the market, right? But you look at the 5-year historical performance of a J&J with dividends reinvested, and it's in triple digits. You know, you look at any of these good quality companies, look at the 5-year return on them. Procter & Gamble, I think, is the only one that doesn't have a very good 5-year return. I think it's like 25%, right? So that does actually underpace the market. But who's to say that for the next 5 years, Procter & Gamble isn't going to outpace the market with all of the restructuring that they've done, you know? So it's tough to look at your portfolio at a singular time and saying, This self-directed investing is not for me. I'm not outpacing the market right now. Yeah, you might not be, but you have to look at it from a long-term perspective over 20 years and think about all that money that you're saving in the fees, right? I put you into an arena that the longer you do self-directed investing, the more potential to realize some of that lost revenue that you would have subject to fees anyway, right? So if you can gain at least half of that back, you're winning the battle, all right? And that money's yours. It's not lost and guaranteed to the financial planners. And those are the people that we're looking to exploit on the channel, okay? Love the content. I'm 42. You're my age, Hart. So loving the channel debt-free and putting my cash in big companies. Thanks, man, for the vids. I enjoy them. Pretty simple, cut and dry. That's really the end-all, be-all. Buying the best of breed, man. Buying companies that resonate with you. Maybe a Home Depot. I don't know. You know, it might be a Harley Davidson. I don't know. But buying the best of breed in any one given industry, that's the idea. But making sure that those assets are housed in a self-directed Roth IRA account, you can really help yourself by doing so and funding it as aggressively as you possibly can. David Strout, pay it off every month. Do not carry a balance. That's my advice. I'm 55 years old. I do not carry a balance on my credit cards. Rock on, David. That's really sound advice to any new investor out there. Quite frankly, anybody. We are a country of debt. I just did a video on this talking about this topic, and I was amazed at how consuming this topic is for people. It's really alarming. It really is. Luis Serrano, the only debt I have is property. Secured debt is different than unsecured debt. And what you're talking about there with property, that's one of those that I actually endorse. As long as you're entering into as favorable terms at the time that you have. You know, me being in the military, it's hard for us because we move around every 5 years. So you got to get in, get out in such a short amount of time. Property doesn't work like that. You think investing is a long-term game? Property is crazy, especially for the individual investor. And if you're buying a house to be your home, yeah, you're an investor, but you don't look at it that way, you know? So I do agree with that. That's a good comment, man. I like that because, you know, I would say, you know, don't not invest in real estate if you do have the means to do so. I've owned 2 homes in my career, and I've made money both times. You know, had I not taken that strategic risk, I wouldn't have made the money that I made on them. So, you know, just kind of keep that in mind. I went out and bought one thing for Black Friday. You did? I got my truck fixed today again. So that's excellent. Bought a Roomba. What's a Roomba? I know I'm a complete dork, man. I do that. I'm like the last to know stuff, honestly. What the heck is that? Okay, Obstinate One is drinking with me and doesn't have any idea what a Roomba is, so that's very cool. I bought a PlayStation for my son. That's very cool. Right on. At Walmart. That's awesome to know. Self-cleaning vacuum. Yeah, okay, I know what it is. It's that robot vacuum. That's cool. Jeez Louise, that's awesome. Wish I had one of those. It's kind of cool. The only thing I bought today was a book. Very cool. Guys, I'm going to wrap it up with that. I've got David Mathis here at the end. Always unexpected debt. We need to have some cash out of investments to be as self-reliant as possible. I agree with that. That's contrary to some opinions, honestly. A lot of people say if you're young, you've just got to be invested in the stock market at all costs. And I have way too much respect for the stock market to have that much confidence in the stock market as well. No way. You will not hear me play ball in that regard, telling somebody to take all of their money and put it into the stock market. No way. Let me just make sure. That is why I like Verizon as an investment. I still need to expand its services in Europe, and they will, absolutely. That's one of the tech sector stocks that I really like. I think Visa is the best of breed. I just bought it at the wrong time. Taking a haircut on that like every other technology I've got. So let me make sure I got these. I'm scrolling Dead people don't have emotion. Ernest, thank you so much for helping me re-emphasize a very kind of a sick point, to be honest with you, but it is a good one, and it does make my point quite nicely. Any books you've had, investment books included, good. Dead people can't spend their money either. Passive investing, Doug. All right. I tried to put it as politically correct as I could for you, man. All right. You don't want to piss anybody off in this group. All right. I love all you guys. All right. Now you get some foreigners, you get some folks that aren't used to my dry humor come into the group, and that's really where it's going to roll. But we're all friends here. That's all right. So it looks like I got to most of the question, guys. It looks like you guys are kind of talking with yourselves. BRKB is the best financial. Yeah, Berkshire is a great long-term investment. I just want to make sure I just keep scrolling down. All these comments I didn't have access to. This is amazing. Luis, I live in San Antonio too. That's awesome. Let's talk. Very cool. Like it, man. It's all about networking, man. That's another one of those intangibles about this community, is we're bringing like-minded folks together who would just as soon take advantage and take control of their own financial future and not share with anybody else, me included. All right. I don't ask you to be part of a stock market mastery group. I don't ask you to do any of that stuff. I don't ask for $20 a month. But I tell you what, I think anybody who's stayed with me now, the 60 folks who will hear this at minute 45 in this live stream, I guarantee you get more value in a live stream tuning in to me every single Friday free of charge. I do this free of charge for you guys. And you know, so we have a little fun. We do. But we also talk turkey. No pun intended. All right. And I think if you just really hear the message, and if you really want to know something or some clarity, man, shoot it my way. That's what it's all about. But I give you guys that access, man, and that's the way I insist it to be. Because I've always said, if I'm going to come out with a message to say, you know, you need to take and utilize your money in a more strategic way, all right, that doesn't mean giving it to somebody for a stock market mastery course is the way to go, all right? And if you think that I'm kidding, watch my Stop Wasting Your Effing Money video. You'll get the point really quick. So guys, thank you so much. I'm going to scroll down here. I'm pretty sure I got all these questions. If I didn't, hit me up via direct messaging, man. It's been really a very enjoyable live stream for me. Enjoy the rest of your guys' weekend, and we will catch you next week. Thank you so much, and be well to everyone. Thank you so much.